Good day everyone, it's Tony here from the Mortgage Chat, and today I have a lovely gentleman in the name of Ben Plohl from BFP Property Group, who is a buyer's agent from the Hills area, here to talk about the role of a buyer's agent in the property journey. Ben, welcome to the show.
Thanks for having me, Tony.
Look, Ben, mate, so our audience will know, tell us a bit about yourself. You know, when did you start your business? What was your background? You know, tell me everything about yourself.
Sure. So background or career was in accounting. So I'm a qualified chartered accountant. Predominantly worked in businesses. At the latter end of my career was a CFO for a healthcare business here in Sydney. Then fell into the buyer's agency space and set up the business BFP Property Group 5 years ago.
Yep. So as a CFO, now a BA. So that's a big transition, mate, right? So what made you change that transition from being high-end corporate to essentially run your own business now at a different field?
Yeah, big change, huge change. So I think my connection to property started close to 20 years ago. So I bought my first investment property when I was 18, a little two-bed unit in Drummoyne, so the inner west of Sydney. Throughout my corporate career, I invested heavily in real estate. And then when I met my now wife, we continued down that path.
Yep.
We also used buyer's agents for a couple of transactions ourselves, really liked the process and the value that we got out of that. So towards the back end of my corporate career, I essentially restructured myself out of a job, looking for the next opportunity. And I thought building my own BA business was a great opportunity, a way to create it the way I wanted to, and haven't looked back.
Yeah. So just for some of our new investors out in the market, explain what is an actual BA, buyer's agent, right? So explain to our audience that's new to investing, right? What is a buyer's agent?
Sure. So a buyer's agent essentially is a independent professional real estate agent that acts only for the buyer. So it's independent representation for the buyer to assist them in making the right decisions when it comes to buying properties, selecting the right property, ultimately paying the right price, not overpaying. So it's just essentially an independent representation for the buyer only.
So essentially looking for something for the buyer at fair value, would you say?
Yeah. So for our business, the types of clients we work with are either home buyers or investors. For home buyers, it's predominantly building a brief for that client, then going out and sourcing and selecting the right property for them. For investors, it's a little bit different. They require a little bit more nurturing. They're a bit more green when it comes to investing. I think a lot of investors or first-time investors, they're scared to make a mistake. So I think leveraging off a BA, for some people, it does really work really well. So we're there to build a strategy for them, conduct location analysis, and then handle the entire acquisition for them.
Yeah. And so essentially, like you just touched it, right? Where your value comes in play is the education piece in resourcing the property.
Look, and I'm pretty open with this, buyer's agents aren't for everyone. But for people that we find good, that get a lot of value out of what a BA can provide, it's time poor professionals, business owners that perhaps don't have the time or capacity to find a piece of real estate themselves, be it a home or an investment. Just on the investor side, people that don't want to make a mistake, don't want to buy the wrong asset in the wrong market. And I think both sides of clients, nobody wants to overpay. So for us, it's understanding value of a piece of real estate, being able to price it correctly, and then conduct a negotiation with the agent accordingly. There's some of the traits that we see from people that want to work with a BA. And I think for those people, we can provide a lot of value.
And you just touched it, right? BA is not for everyone, right? Some wants to do their own research, and some do actually need a bit of guidance, right? So, I got a lot of first-time investors that want to invest, right? And they don't even know where to start. They go, "Hey Tony, I'm looking around Queensland, I'm looking around Melbourne, I'm looking at WA, South Australia, but you live in Sydney. You work full time. Where does this research even start?" I myself invest in Sydney. I struggle keeping up with Sydney itself, right? And so it's like, well, what are the chances of you wanting to invest in another state that's 3, 4, 5 hours away? So Ben, as a BA, where is is there a certain location that you specialize in? right? Because I know there's BA that works in Queensland, WA, South Australia, etc. Right? So is there a predominant certain locations that you specialise in?
Yeah, so we don't buy everywhere. For home buyers, the focus is in Sydney.
Yep.
But they're not all of Sydney. So predominantly on the Hills District side, the north and lower, upper and north and lower North Shore.
Yep.
Certain parts of the inner west and those sort of northern suburbs. That's our focus for home buyers. For investors, we've got a little bit more flexibility with where we're happy to buy.
Yep.
Again, it's not everywhere. Again, Sydney is a big focus for us. We do a lot of work around the Central Coast, Lake Macquarie and Newcastle markets.
Yep.
Western Sydney and southwestern Sydney as well. Heavily buying into those markets and a few select regional locations. Look, over the years, we've bought in markets like Brisbane and Adelaide and a few others. But the last, say, 12, 18 months, we've started to refocus our expertise in certain markets as opposed to buying everywhere.
Yeah. And that's generally better, right? Because you're a specialist in certain areas.
Correct, yeah. And I've got to the point where if a client or a prospect comes to me and they want to buy in a certain location, not comfortable with it, I don't have that level of expertise, I'll refer them on to someone else. And I think it's something that is important to act in the right, in the best interest of that client.
Yeah.
If you're not comfortable or you don't have that level of expertise or level of deep relationships with local agents, then you don't want to do them a disservice.
Correct, right. And being in my field for nearly since 2000 and I'm thinking back now, 2015 when I started my business, right? We've spoken to so many buyers agents in our life, right? They approach us, want to do business together, but you sort of know sometimes they're there for a quick buck, right? And that sort of turns us off in trying to even consider referring our customers into a specialist, right? That targets certain areas.
Yeah, all right. 100%. And we do that even for our home buyer clients in Sydney. If it's a market that we don't have deep connections and contacts in, we'll refer them on.
Ultimately,
100%. We're a relationship business and based on referrals. Yeah. If we mismanage a client, it's not worth our reputation. And ultimately, we want to do good for the client. If we're not the right people, then we'll
100%. Just for our audience, that's first-time investors, high level, what is the process if someone wants to engage into your services as a buyer's agent?
Yeah, so initial conversation first, just to make sure that we are the right fit for them and they're the right fit for us as well. It's got to be a relationship that gels, that we can see there is a genuine connection and we can definitely support them and add value to them. And once we essentially qualify them, we can then have a more detailed conversation. Once they then engage us, we dive into a strategy session or a brief session. So really dissecting what they're looking for and building a brief paper. From there, it's really rolling into the acquisition phase. So when we exactly know what we're looking for, we can then dive into that acquisition process and source, select, inspect all available properties on the market. A big part of what we do, which comes back to focusing on certain markets, over time we build really close relationships with agents. That in turn provides us access to a lot of off-market properties, pre-market properties. We also get a lot of vendors approaching us directly that are looking to sell perhaps without the intervention of an agent. So that's also another, I guess, benefit for our clients. And it's just saving them that time to really go out and do that hack work themselves. And then present the opportunities, inspect it with them, especially if they're a Sydney home buyer, and then embark on a negotiation strategy, whether that be via private treaty or even at auction.
100%. Right. When I was younger, I was against paying for this service, right? Because I'm thinking, man, I can do it myself, right? But as time passed, you have a family, you're busy, you're working, right? There's no 9-to-5 jobs these days, right? If you're a PAYG, you're more than likely you're working more than 9 to 5. So you can't do the research yourself, right? You don't have the time to do the research yourself, right? And so that's how nowadays it's like, well, I definitely don't have time to do the research myself. That's why I'm happy to engage into a buyer's agent to look at certain areas for me and do the research. They have the systems, they have the softwares, they have all the connections with agents in that certain location that, hey, I have that may have a property up for you.
100%. I think most people's careers are now very busy, everyone's got busy family lives. Time is really important. And I think it goes for lots of different professions. You can do everything yourself if you want to, but I think there's a big part of the community that are happy to outsource it should they see that there is a clear benefit and there is value to be gotten from that relationship, and that's what we're here for. We're here to fill that gap, that void, and genuinely add value to someone's buying journey.
Yeah.
But like to your point earlier, not for everyone. If people have extensive time to devote to a search, then by all means go and have a look. And we find a lot of clients, especially the home buyers, they'll come to us after looking on their own for 6 to 9 months, quite frustrated, perhaps have missed out on a few auctions, and come to us, and then we can really, strip back their brief, perhaps their requirements, and make sure that they're looking at properties, one that they can afford, and just really add value to their journey and ultimately get them into a home a lot sooner than perhaps they could have done on their own.
Buyers agents have a lot of connections with local agents in certain areas, right? That can provide off-market opportunities, right? Or vendors come to you directly and not engaging to an agent. A real estate agent, right? Essentially what I said. Can you just give us a bit of details? What sort of percentage you would buy something that's off market in comparison to what's on the market?
Yeah. So the last 12 months, we've had between 50 to 55% of our acquisitions are off market.
Wow.
So it's quite a lot. We look at a lot of off market properties that don't make sense, and we, palm them off or put them to the side. But we're looking for opportunities where a vendor is desperate to sell, or due to a whole bunch of reasons. But last 12 months has been that sort of 50 to 55%. So it's quite high. The year prior was a lot less. But I think moving forward, it probably will stay around that sort of 50-50 mark. And that's just really relationship driven. Like yesterday, bought an off market property in a regional location in New South Wales, and it's just from transacting in a market, for some time. You start to build those connections. But not all off-market properties make sense.
100%.
In some cases, and in most cases, it means that it's an unrealistic vendor. So we discard a lot of them. We see lots of off-market properties that we'll say to a client, let's allow that to go to market. Let the vendor expectation adjust to what the market's telling them, and then pick it up later.
100%.
But we've done a few of those.
100%, right? And look, and I hate to say, I actually see real estate agents in our local area do that as well, right? I'm not going to name which real estate agent, but real estate agents around the hills area, they do that themselves, right? They try to do an off-market sale, but really sometimes that price they're trying to sell it for is not in line with the current market value. Right?
Yeah.
Right? So we get that all the time.
Yeah.
Right?
Well, they do that just like for a first 2 weeks to determine what the price guide should be. And then go to market with that price guide. But yeah.
It's good to know. It's good to know. So Ben, let me ask you this. There are a lot of buyers agents out on the market, different types of buyers agents. Can you explain to me what type of buyers agents are out on the market and what service they provide? Yeah.
So I think the concept or the term buyers agent can be quite loosely used. You see a lot of buyers agents that call themselves buyers agents sort of flogging off the plan apartments or house and land packages. To me, they are incentivized to do that because they're paid by the developer or the builder. They're essentially marketers. On the flip side, you've got independent buyers agents that are representing the buyer only and are paid by the buyer. That's where I fall into that category. And then even in that category, you've got larger transactional focused BAs that are more volume driven, or a smaller boutique agency, which again, I'd probably categorize myself there, that are not necessarily chasing volume, but working with a smaller group of clients at any given time. For me, we don't have a big team. It's a small team. I like to work one-on-one with our clients. And I don't want to really lose that. But yeah, that's the kind of couple of different models that we've seen in the marketplace.
All right. So you're essentially a more high touch buyer's agent, right? Where, hey, this client may want to buy 1, 2, 3, 4 properties with me. Is that the clientele that you
Yeah, very much high touch. We love sitting down, meeting clients in person, not necessarily everything on Zoom. We work directly with each of our clients, or I do personally. We've also got a support team and other buyers agents in the team that support me in that endeavour. But definitely much more of a smaller boutique agency as opposed to a larger, more transactional focused
Yeah.
BA.
So Ben, the last few years, there's been more and more buyers agents out in the market. It's very hard to choose from, just like a mortgage broker, right? Very hard to choose who to work with. So just so our audience can know, what are the things they should be looking out for when they want to engage working with a buyer's agent?
Yeah, you're right. So there's been a lot of new entrants to the market. I think the first thing is level of experience. So understanding how long they've been a BA, how many properties have they personally bought? Have they been an investor? I think is crucial. How many clients they've worked with?
Yep.
There's a lot of clients or BAs that perhaps have only done a handful. Yep. Look for someone that perhaps has done a little bit more volume, has a good track record. Ask to speak to past clients. Google reviews is great. It gives you a good representation of what it's like to work with that business, but ask for some contact numbers of past clients and have a direct conversation with them. Understand, are they independent? How are they getting paid?
Yep.
That's a really important point. Ultimately, you want to be using a BA that is fee for service.
Yep.
That's going to ensure that there is independence there.
Yep.
Are they accredited? Again, there's a couple of different buyers agency bodies. REBA, PIPA,
Yep.
REI New South Wales, all those different associations. Again, I'm members of all. Just to understand, are they part of different professional bodies?
Yep.
Just to ensure that they've got a high degree of ethics, professionalism, etc.
100%, right? So Ben, I'm very skeptical when someone's trying to sell me something, right? I'm very skeptical. Okay. Let's, for example, I'm a first-time investor, and I come to you and looking for your service, looking for your guidance. Okay. Let's say, for example, you recommend me up Newcastle. Now, are you personally an investor in the locations that you recommend? Right, because that's very important, right? Because I know there's a lot of buyers agents that are on the market don't even invest themselves. They even have properties themselves, or not even buying stuff what they're recommending. So let me ask you the question: if you were to offer me a certain location, are you investing in that certain location?
Yeah, it's a good point. And look, I don't think it's necessarily important for that BA to be invested in the location that you are being recommended, because ultimately that BA perhaps have built their portfolio in a different market. Turning to today, different locations will make better sense at different times. But I think what's important is to understand, well, has that BA invested over multiple cycles? Do they have a portfolio?
Yeah.
And how's that trended? I think that's probably the more important question. So for instance, look, in Newcastle, we buy a lot in Newcastle. I haven't personally invested in Newcastle because I built my portfolio 10 or so years ago.
Yep.
But it is a market that I would go into. So I think it's just more important to understand, are they an investor, and can they demonstrate that they've done reasonably well out of building wealth through real estate? Before
you touched a bit on how buyers agents get paid. Yeah. Okay. So I personally know how they get paid, but I want you to just explain a bit more how buyers agents get paid, or how they get remunerated, right? So I've heard buyers agents that get paid by the developer, which is what you touched on a little bit. Okay. But some buyers agent also charge a fee on top of that. All right. So they charge a client a fee.
Yeah.
And I'm also going to charge the developer a fee. I don't know if that's wrong or right. I don't know. Okay. But I'll let you explain that. And can you elaborate a bit more about that?
Yeah, sure. So I think the point you made just then, where you're talking about buyers agents getting paid by the developer, in my view, they're not really buyers agents. They're marketing companies.
Yeah.
They've got their finger in the pie in a couple of different pies. They're getting paid by the developer, paid by the construction company, perhaps even charging their client a fee.
Yep.
And they're pushing just certain types of properties. They're not giving a holistic review of the client's position and then starting to recommend locations. The client essentially in that circumstance is the product. And to me, I think there's a lot of flaws in that.
Yep.
The independent buyer's agency route, there's two ways that we can be paid. It's either a commission, so a percentage of a purchase price, or more commonly now, and what I do is it's a fixed fee for purchase. So at least there's no bias to the end, like of what the final negotiated purchase price is. It's a fixed fee that is known up front for a particular service. So independent buyers agents adopting either one of those two models, fixed fee or a percentage.
About before these rate rises, Ben, buying an investment was very easy because it's very easy to sustain the repayments because the rates were so low, right? And that's why everyone's kept on buying properties, gearing up, etc., etc., etc. Okay. So now the rates have gone up so much, right? What sort of changes have you personally seen in the market with the buyer sentiment? Right?
Yeah, so I think the concept of positively geared properties becoming more challenging to get. Still not impossible. There are opportunities out there.
Yeah, but it's more of a needle in a haystack. That's what I'm trying to say.
In the markets that we focus on, which it's not overly common, right? You can go to far-flung locations and still achieve that, but not for our clients. So it has become something that the clients ask, but for our client base, cash flow is important, but it's not the driving force behind why they're investing. They are more growth orientated, value add orientated. So cash flow, albeit important, is not the number one reason.
But do you personally work out the cash flow on their end before you buy a certain location from?
Yeah. So look, at the strategy development stage, there's some of the questions we would ask is, look, how important is yield on a particular property? At what point is your family household income or going to be sacrificed, which is important to know. So then we can craft a plan around which locations we should consider, which asset types we should consider as well. So it's really just as part of that getting to know the client phase before we then start to recommend certain locations or asset types.
Because that's a conversation we have sometimes, right? It's like, well, we have clients come to us, go, hey, Tony, I want to buy something for, let's call it $700,000. But they don't know that logistics behind that $700,000 loan, right? The cash flow. Or can you sustain it?
Correct.
Right. So we actually work out a cash flow from, hey, your negative is going to be X amount at the end of the month. So we start reverse engineering the purchase price a bit more and bit more and bit more.
Correct. Yeah. And that's an option. Yeah.
Right. And that's what we do. And that's what we do before they engage into a buyer's agent. Right. Because there's no point of them going to a buyer's agent and go, hey, I want something for X amount of dollars. We don't have to work out the cash flow. Correct.
Cash flow is the lifeblood of business, of property ownership, etc. It's really important to know. And there's also looking at stress testing a property's cash flow too. Should interest rates continue to go up? What does the cash flow look like? What happens when the interest rates pull back, if and when? What does the cash flow look like on that property? Do you have other properties? Let's combine them all together to have a holistic portfolio review, and that's really important to know. Are there certain life events coming up? You got kids going to private school, or is a partner exiting the workforce for whatever reason? Things like that. Again, I want to know because I want to. I'm recommending certain things to a client. I want to know those things. To then give some more accurate sort of recommendations.
So Ben, the last probably year, we've probably seen about 11 rate rises, right? So how have you seen that in the buyer sentiment, and how has it affected the buyer's decision to invest in your market?
Yeah, so rate rises do affect consumer confidence and sentiment. So people have had to adjust expectations. I think the biggest impact that we've found with our clients or prospective clients is borrowing capacity has shrunk significantly. So what they were hoping to buy or do has had to be scaled back significantly. 100%. Look, we're starting to see probably the emergence of more sophisticated investors, perhaps more wealthy people that have capacity, businesses doing well, or their corporate careers doing really well.
Define wealthy, but
it
right.
Could be. Yeah, so that's really so we're starting to see the emergence of people that are a little bit more perhaps experienced or have seen or experienced recessionary environments or higher rate rise or higher rate environments and are now more opportunistic. So we're starting to see the opportunists come to the market. But at the same time, with interest rate rises, the market has been very solid. Talk about Sydney. The market over the last 3 months has increased by, call it 3.5%, I think. Look, we're seeing a lot of demand. But that's really a reflection of the supply environment.
Correct. That's what I was going to say. It's supply, right? And also it's a big driver. I think is the annual property tax that's going to be abolished right by the end of the financial year. Right. So I think that's also pushing up the prices a fair bit.
So it could be a temporary sort of spike in the market from increased demand, very, very tight supply, and a lot of migrants coming to our shore. So there's a couple of different phenomena that are really driving price. But I think it will come to a point where continued increases in the rates will have some sort of an impact. I still don't think it's going to be so widespread. I think most buyers or households have buffers in place. But there will be distress, absolutely. But I think in the markets that we operate in, I just don't see it happening.
So Ben, as an investor that's trying to grow the portfolio, right? So yes, you touched a bit on borrowing capacity, where they can borrow X amount, let's call it 500,000 12 months ago. But now the borrowing capacity probably dropped down 40% because of these rate rises. Let's call it down to 300,000. Is there still opportunity in those price brackets?
Yeah. So for us, we don't really buy much in those lower end markets. So for a lot of our clients, we've either said that have had a significant drop in borrowing capacity, we've either said chat to someone else that can specialise in those markets. But my view is, well, perhaps it's not the right time to buy. You need to sit on the sidelines for a period and wait until conditions for you improve. So yeah, a lot of people that we've worked with, even existing clients looking to continue to grow the portfolio, they've just had to change plans. And just sit quiet for a period. At the same time, rents are increasing across people's properties, so that's kind of been a good benefit as well. But yeah, unfortunately, a lot of people have had to.
So Ben, with all these investors that just want to build a portfolio, okay, is there a situation where, hey, should I be chasing the growth in comparison to chasing for the yield, right? Because I know there's buyers agents out there that only focus on the cash flow positive rather than the growth. Can you comment a bit about that?
Yeah, so look, personally, I've always been a growth investor. That's why we've invested in certain markets across the country. But I think for clients, you've got to have a good mix of both. And it's not impossible to achieve both. Buying into a market that has strong fundamentals and data points that will give us confidence that it is in a growing market, it will continue to grow, but also the yield is still sound. I think it's important to have a good balance of both. I don't. But then again, it depends on where the client's portfolio is, because there is a point in time where yield or cash flow will be important to complement perhaps another property that is loss-making. So it's all about understanding where you are, at which stage you are in building your portfolio. And then at every next opportunity to buy, you've got to reflect on, well, what's the overall position of the portfolio? And what is the logical? It's like playing chess. What's the next step? Is it something that has a higher cash flow, or is it continuing growth?
That's right.
And then it's asset type. Is it resi? Is it commercial? Is it duplex? Like, there's a lot of different moving pieces, and it's just having that knowledge to determine what's the right.
That's right.
Step.
Because more than likely you keep on buying these growth properties. More than likely it's going to be highly negative geared. How many of those properties you can sustain? Paying that negative cash flow out of your own pocket can only take you so far.
100%.
Right? That's why, the cash flow positive properties come in play at a later stage to balance out, to essentially balance out that book.
Exactly. Yeah. It's it's just pairing up, higher cash flow properties with negative properties and different, like I said, different asset types. Commercial, should you be that way inclined, right? It's about looking at it as a business too, right? Understanding what's the right next step. I think going down the path of just buying significantly loss-making properties, you're going to come into a pickle, right? You're going to be, the banks will stop lending. And you're just going to become, drained from a negative cash flow perspective. And that's just going to, halt you from growing and progressing.
So Ben, as a buyer's agent, what sort of properties would you recommend our audience to try to stay away from?
Yeah, off the plan apartments.
Right.
Units.
So any location. So you're saying anywhere that's got.
It's too risk. I think I like to buy something that I can physically see. In this environment where construction companies are going bust, there's too much risk. Anything in a medium to high density unit blocks to me is a bad decision. As an investor, home buyers is slightly different, but as an investor, you've just got very limited access to the land component. And as we all know, land goes up in value, the building declines. House and land packages, again, that are in more greenfield development sites. Personally, I'm not a fan. Some people like them, but for me, I don't see great value in them. I don't like to buy anything brand new. Because we don't have the ability to add value to that asset.
Yeah, fair enough.
And they're typically located in areas that have significant supply or incoming supply. That's going to stymie our growth moving forward.
Have you ever recommended a client that already has, let's call it apartment in their portfolio? Let's say, let's just say they have an apartment, that hasn't grown for the last 5 years, right? Because apartments really hasn't grown the last 5 years in Sydney itself, right? So would you ever come to the conversation where, hey, do you know what? Maybe you should get rid of that apartment?
Yes, many times.
And rebuy something else, right? Because for me, I see clients with houses in their portfolio. I've seen houses that's grown a lot, but they also had that apartment that hasn't been anywhere, right? So I sort of sometimes, recommend it. But what about you just get rid of that because it hasn't grown, and relodge that 500 grand debt you have in Sydney apartment. Then you can relodge that to, let's call it WA, right? Not saying I'm to buy WA, but let's say relodge it to WA. That's probably got more opportunity than keeping it in.
It's all about opportunity cost. And I think, yes, we've had that conversation with lots of clients that come to us with existing properties in their portfolio, be it an investment they've bought or even their own property that they're living in. Just to name some places like Rhodes, places like Meadowbank, one-bedroom apartments in those high-rise unit blocks. We've given the recommendation, look, there's no growth over a long period of time. Let's do something about it, and they've sold. Places, we've got another client that's got a unit in a very high-rise building in Fortitude Valley in Brisbane.
Yes, I know.
Again, it's done nothing. South Melbourne. Again, Docklands, those types of places. Unfortunately, they're just the wrong asset type. That just won't help for the client.
But as an investment, look, it's probably not the best idea, right? But look, if it's an owner occupier,
that's a different story.
That's a different story, right? It comes down to affordability. Correct. Right? Why are people still buying apartments in Sydney? It's affordability. Right. It's not because they want to. It's affordability because they can't buy it. They can't afford a house.
Look, owner occupiers is slightly different. Still, I'd probably prefer someone to rent rather than buy it. But it's not to say that units are bad. We do buy lots of units, but we like old style red brick, blonde brick
100%.
walk-ups. Blocks of 4 or 6 or that's 10 or 12.
Right, nowadays, hey, I've got a swimming pool, got a gym, right, got a lift.
No lifts.
Right?
No.
That becomes expensive, doesn't it?
Yeah, so we're looking for those older style boutique blocks in key locations. Like in the West, we've bought lots in the inner West that kind of fit that bill. And they can be good long-term investments. I bought one 20 years ago and it's done really well. So it's not, we're not anti-units, but it's just got to be the right type.
It's got to be right? Yeah. Fair. Ben, thanks for your time, and thanks for giving our lovely audience all the insight about what a buyer's agent does. So just so they know, where can they find you?
Yeah, thanks, Tony. Thanks for having me. Our website's probably the best place to reach us. It's bfpproperty.com. All our contact details are there. Thanks for having me.
All right.